Do I have my script? I don't even have the agenda. We have the.
Grab from the door.
Just give me the. Hey, everybody, I'd like to welcome you all to the meeting of OHA's Committee on Resource Management. It is Wednesday, May 1st, 2024. It is 1:32 PM. And I am officially calling this meeting to order. Present is Trustee Souza, Trustee Galutaria, Trustee Aquino, Trustee Akaka, Trustee Trask, and myself giving me the quorum to conduct the meeting. I have Trustee Luana and Trustee Alapa is also here. So with that, oh, sorry. And supporting us on the support staff on this, on the teleconference is Karina Aquino and Melissa Winahan. Also joining us is our Pohana, Stacy Ferreira. And I will turn the meeting over to Stacy to introduce the other staff on the teleconference. Stacy.
Aloha, Chair, Vice Chair, Trustees. Joining us today from the administration is Chief Financial Officer Ramona Hing, Financial Analyst Grace Chen, Endowment Director Ryan Lee, Interim Corporation Counsel Everett Ota, Interim Senior Legal Counsel Nichi Ozawa. We have Interim Information Technology Manager Kevin Chalk, IT Systems Engineer and Administrator Kelsey Wade. Mahalo.
Okay, thank you, Stacy. So we'll move on to the approval of the committee minutes for March 27th. And is there anyone signed up to testify on the minutes?
No testifiers.
As there are no testifiers, can I get a motion to approve the minutes of March 27th?
So moved.
It's been moved by Trustee Souza,
Mr. Chair.
seconded
Seconded.
by Trustee Aquino. Members, are there any changes to the minutes of March 27th? Okay, as there are no changes, can I get a roll call vote for the approval of the minutes of March 27th?
Trustee Ahuna is excused. Trustee Akaka.
Aye.
Trustee Aquina.
Aye.
Trustee Alapa. Trustee Galataria.
Aye.
Trustee Lindsay. I do not see her on. Trustee Souza.
Aye.
Trustee Trask. Trustee Trask.
Aye.
Mahalo. Chair Waihe'e.
Yes.
7 yes, 2 excused. Motion passes.
Okay, as there is no unfinished business, we shall move on to new business, the Native Hawaiian Trust Fund Investment Portfolio Review for the quarter ending March 31st, 2024. Is there anyone signed up to testify on this presentation?
No testifiers, sir.
Okay, with that, I will turn this over to our Pohana, Stacy Ferreira.
Mahalo, Chair. At this time, I'd like to have Ryan Lee, Director of Endowment, provide trustees with a report for the quarter ending March 31st, 2024 of the Native Hawaiian Trust Fund. Mahalo.
Aloha mai kakou, Chair, Vice Chair, fellow trustees, colleagues. I'll be reviewing the Native Hawaiian Trust Fund performance as of March 31st, 2024. The full report, which is produced by Northern Trust, is attached, but I will only go over key areas of the report. I mean, the format should be very similar to previous reporting, similar to last discussions. So basically, I'll provide an overview of markets, performance, policy attribution, asset allocation, and quarterly activities. Can we go to page 3? Yes, the market overview. There we go. So this slide recaps markets over the last quarter. US growth continues to surprise on the upside. Markets were encouraged by the resiliency of the US economy in the face of restrictive monetary policy. So basically, high rates. Now, the positive economic data led to upward revisions in growth estimates for the US economy. On the negative front is inflation. Now, progress towards the Federal Reserve's 2% target stalled around 2.8%. So inflation reversed its downward trend and ticked upwards, diminishing the expectations of Federal Reserve cuts. So just today, the Fed announced that they're keeping rates the same to tackle inflation. Now, the bottom chart highlights returns for major asset classes, such as fixed income, equities, real assets. The bar chart represents the quarter's return, while the bottom row represents the calendar year return for the asset classes. If you look at equities, which is the blue box labeled A and B, US markets did extremely well, up 10%, followed by non-US equity that returned 5.3%. Now, gains in the US were led by technology stocks, companies that are tied to artificial intelligence boom actually did very well. Now, conditions were less favorable for fixed income. If you look at the orange box labeled C, as expectations of interest rates cuts have been pushed back, investments within investment grade, such as treasuries, corporates, agencies, bonds, returned a negative 0.8% for the quarter as overall yields increase. So basically, as yields increase, prices for bonds tend to decrease. Can we go to the next page? Now, this slide covers performance. Given the market backdrop I just reviewed, the Native Hawaiian Trust Fund ended the quarter with a market value just shy of $570 million. So about a net $23.3 million increase. And this accounts for a $3 million spending distribution to fund operations. Now, chart below highlights the short, medium, and long-term performance of the trust fund. The green bar represents the Native Hawaiian Trust Fund performance. The yellow bar represents the policy index. So when you're looking at, for the quarter, label A, which is the first column, the trust fund returned 4.5%, underperforming the policy index benchmark by 0.8%, which returned 5.3%. And for the fiscal year to date, label B, which is the second column, the trust fund returned 9.8% versus 11.9% of the policy index. Now, trustees should always focus on the longer term results. That's the best way to measure the success of an investment program, measured by the 10-year performance and since inception. So if you look at the green box, labeled C, for the 10 years, the Native Hawaiian Trust Fund returned 6.7%, underperforming both the policy index as well as the CPI plus 5. On a positive note, since inception, the Native Hawaiian Trust Fund has outperformed both the policy benchmark as well as the CPI plus 5 benchmark.
Trustee Galutario.
But yeah, sorry about that. Why is it not performing the 10-year performance?
Right, so when you factor decisions made in the past, the implementation of the portfolio, the underweight to private equities, these all add up to the underperformance, right? So this is implementation as well as the governance structure, I would say. Right, so policy benchmark is a way to benchmark the actual performance where we're falling short, right? So over the long term, we are behind. I think the reasons being, again, the private equity allocations. We have not been able to keep up with the target. We have not been making reinvestments or recommitments to private equity, which is a high-performing asset class over the long term. So being underweight that asset class is a detractor to returns over the long term. So that's what's occurring.
Trustee Aquino.
Well, thank you. And it is encouraging that the portfolio has doubled since inception. And I want to ask a question we've raised in the past with regard to how much risk we could potentially take if perhaps we targeted investment returns from 8% to 8.5% while not increasing our spending. What are your thoughts on that?
Correct, and that's part of the asset allocation modeling that I'm currently working on. And we'll come back to the RM committee with a workshop to discuss that more in detail.
Thank you. Looking forward to it.
Thank you. Okay. Next page. So this slide actually breaks out the attribution, the policy attribution, and explains where the negative 80 basis points is coming from. So it's a way to slice and dice the portfolio to explain returns. So if you look at the last column, which is shaded in purple, so you can see the 80 basis points up there highlighted, that's the underperformance versus the policy benchmark. When you add the numbers beneath that, it should equal to the negative 80 basis points. So if you look at the contributors to performance this quarter, it's coming from the green box, global equity, as well as as well as C, which is the blue box, fixed income. The main detractors for the quarter is private equity, as you can see, highlighted in B. That detracted negative 1.2%, offsetting a lot of the positive contributions from the other asset classes. But I think, as mentioned in the past, private equity valuations are delayed. Valuations, as they come in, would help narrow the performance gap. Despite the performance valuation being updated, there's still issues with the actual being underweight the asset class, which is actually being measured as well. So it actually costs the portfolio. In terms of when you explain underperformance, being underweight that asset class would actually will continue to hurt the portfolio when we measure and look at attribution. This is something that we need to look into to develop a short-term and long-term plan such that this issue doesn't accumulate over time. Can we go to the next page? Okay, so this slide compares the Nationwide Trust Fund performance as well as the policy index to a comparable peer group over the last quarter, year to date, 1, 3, and 5 years. And the goal for the Nationwide Trust Fund is to be at least within the first and second quartile, at least above median. Right, so the highlighted green box that you see is the actual performance as well as the policy index performance. So when you look at the bar chart on the last quarter, you see a green box, green square. That's the Nationwide Trust performance. And the yellow box represents the policy index. So when you look across the last quarter, 1, 3, the performance is above median. Looking at 5 years, the portfolio is actually, the actual portfolio is actually below median, but the policy index itself is slightly above. So a couple of things you can take away with this, especially with the 5 years, is that when you look at the policy index, if the goal is to be above median, the policy index itself is actually hovering around the median level. So there are ways to kind of review the policy mix, as you mentioned, to take more risk comparing to other institutions. So this is part of the asset allocation work that we will be doing. And again, it's best to measure it within a 10-year timeframe, and it's something that we're looking to add within this table. Next page. This slide is a snapshot of the asset allocation at the end of the quarter. So the chart on the left is linked to the table below, which breaks down the market value, the actual weight, the target weight, the difference, as well as the min-max ranges. So the takeaway here is it's highlighted by the green circles. The asset allocation is all within policy ranges. Portfolio rebalancing in March actually reduced the cash level and reduced the underweight to the asset classes such as fixed income and hedge funds. Now, we cannot easily rebalance into private equity. So private equity remains underweight. It will take time to restart the commitments and build the exposure back. Now, so from our current positioning, we managed the underweight in private equities by maintaining an overposition in public equities and global real assets. And then that's to maintain a similar total portfolio equity risk to policy. Again, the highlight here would be also that cash balance has been reduced from 14 million down to about 5 million as of April 1st.
Trustee Aquino.
Thank you. Along those lines, you mentioned in the report that we may need to consider updating the private equity policy targets.
Correct.
And do you have an example of an update in mind?
It's part of the asset allocation work in terms of targeting the return objective and spending and how much liquidity the organization can take. So as part of the study is to examine the spending as well as the liquidity profile of the institution. Okay, next page. So this slide provides an update on administration cash flow activities for the quarter, right? So as I mentioned, we did rebalance the portfolio, reduce the cash balance. So we're able to reduce the cash and add to asset classes that were underweight. So for this example, we added to fixed income with this State Street aggregate bond, as well as additional contribution to PIMCO tax opportunity, which is within the absolute return hedge fund allocation. At the same time, we made a 3 million distribution to fund spend. Now, the table below highlights the private investment cash flow activities, right? So this explains how cash is being built up, right? So quarter to date, capital calls, we had 2 capital calls from managers representing 490,000. This is to contrast the cash distributions that we've been getting from various managers equaling 1.8 million. So net, we got a 1.3 million cash infusion into the portfolio. So typically, if you have a active private equity portfolio, your cash contributions, your distributions will fund your cash capital calls. In this case, we're getting cash flows on a quarterly basis into the portfolio. So that cash needs to be rebalanced back to the portfolio. Next page. Basically, this is just a summary page highlighting the performance. So overall, it was a good quarter. We should expect private equity valuations to narrow the underperformance to policy benchmarks. But again, I mentioned that we do need to update the private equity policy targets such that the ongoing benchmark issues would persist if we don't. And again, highlighting the portfolio's rebalance back to target levels, which reduce the cash. But again, the PA cash that comes in requires ongoing reinvestment. In terms of current focus for administration, we mentioned the asset allocation work that we're doing. Hopefully we'll schedule a workshop with the ARM committee sometime in June or July. We're also starting the private equity commitments, so building up due diligence and potential manager commitments within a 3 to sort of 6 month time frame. We should have potential managers for the ARM committee to review. In the same time, we're adding resources, tools to help restart that program. So private equity monitoring tools, a database, client relationship management, all these are required to perform diligence and monitoring of the portfolio.
Trustee Aquino.
Thank you, and appreciate the presentation. You just mentioned that we're restarting private equity commitments. I don't quite recall why they were paused in the first place, and in your estimation, what impact did pausing them have on our portfolio?
I think that decision, I think we're stepping back to review the overall policies from the board level. So that forced a pause on commitments. So they're bringing the board consultant to the board, updating the policies and so forth. That I believe that was one of the reasons. How did it set us back?
Yeah.
Why? Just given that in order to have a good private equity portfolio, right, you need to continue to make commitments, vintage years.
Right.
Right. So by not doing that, you risk not maintaining the current private equity levels. So being underinvested in private equity
Right.
hurts the overall performance. Right. So that's the issue that we have today.
So in your observation, that happened because we were trying to decide what policies to follow. It wasn't a strategic decision with respect to investment. Well,
Correct. That is correct. Yes.
I'm eager for us to set our policies.
So part of the asset allocation would discuss the target private equity levels and talk about pacing that we would need to get back on track.
Yes.
And again, it will take time to get back to a level. It does not, occur over a year. It will probably take 3, 4 years.
Thank you.
Any other questions, trustees? Trustee Souza.
Brian, when was that? When we decided not to recommit?
When?
Sorry, I always like to put things into perspective, right? It's prior to me being here. So when was that? And projected timeline, as soon as we recommit, potentially making money again. We're stagnant for a while, which is very concerning. We sit here listening to policies and what we should do, but we have an investor, right? We have our treasury director, could be investing. So since then, we haven't invested, right?
That is correct. Yes.
That is correct. Our private equity, right? I think we started off at, we're at 18, 19%, somewhere around there. Talk to what, 10%?
That's
What are we at? Somewhere around there, right? In about 4 years, we're down to zero again. Safe to say, if we don't recommit.
That is correct.
So when are we gonna make the move?
Right, so-
I don't like to just keep talking about
Correct.
this, yeah.
Exactly. So
We have our guy right here. Yeah.
Right. So just going forward, I believe within 3 to 6 months,
Yeah.
we should have I've done the work in terms of diligencing managers to
Mhm.
present to the board.
Perfect, bro.
So we can restart committee.
Looking forward to recommitting, man. I'm a long-term commitment kind of guy. Right on.
And I just want to add on to what Ryan was saying. We just re-upped or re-engaged when I came on as Kapuana and had the conversation with Chair on why we weren't proceeding in that manner, and which we got the green light to proceed. Mahalo.
Sigalatera.
Thank you. So just to be clear, what we just said was a timeline. So I heard 3 to 6 months, and then we'd be up on the saddle again. Is that what I heard? And what do you need for that to happen? Stacy, what do you need for that to happen?
Right. So we'll be on track in terms of starting to make commitments. But again, in terms of getting to a target level, that's going to take time. Right. So in terms of what we need, I talked about the added or needed resources to do that. Right. So private equity portfolio monitoring system, a software, a manager database. So, I mean, you need resources to get things back on track to do the work that's required.
And that's a direct reflection of what
Oh, yeah.
trustee Souza was asking, because we need to know what you need.
Correct, yes. I've been working with the CEO in terms of
Okay.
resources and needs.
You're right. And so Ryan has made me aware of his resource needs and I have approved those.
Trustee Trask.
You know, I don't understand when we say the portfolio was rebalanced towards policy targets. What are you telling me there, Ryan? What
So-
happened with the portfolio to rebalance it?
Right, so it's rebalancing back to policy targets. So trustees have established policy targets for the Native One Trust Fund. As you can imagine, market values can change, so that policy targets can, you can be off track, right? I mentioned the cash balance building up. So that leads to several asset classes being overweight or underweight. Rebalancing means bringing the underweights, overweights back to target levels that the trustees have approved. So it's
Can you
moving
give me an example, Ryan? I just need to see an example of
so-
something we had in the portfolio, changes occurred, and then the staff rebalanced it. I mean, we've been through, we're ongoing with training with VJoy now. But when I read this, portfolio was rebalanced towards policy targets. We're currently assessing and developing policies. We're doing that now with VJoy, but there's already been a portfolio rebalancing. I don't understand what was done to rebalance the portfolio toward the policy targets, because right now we've been working on a training with regard to policy.
Right, so you do have an existing policy that's in place, and the portfolio needs to be managed, right? Even with
Yes,
the ongoing policy discussions
yes,
with VJ on board. So the rebalancing is, if you look at page 7, for example, you have target weights that the policy level, the policy targets have been set. So rebalancing, for example, that occurred back in March, we reduced the cash levels back into asset classes that were underweight. So for example, fixed income, as well as the hedge funds. These were asset classes that were underweight to target, just to reinvest that cash, to make the cash work for you over the long term.
Trustee Lindsay.
Stop investing? Why were we at a standstill? Because I know it wasn't the board that did that.
Can we have CFO Ramona Hink come to respond to Chair?
Okay.
Aloha, Chair.
Aloha.
Hello, trustees. Okay, so way back in 2021, Ryan did multiple workshops to the board, and he introduced concepts about our investment policy statements and our asset allocations. And at that point, there was a pause because the trustees did not want to move forward with these policy changes that were occurring and the asset allocations. Subsequent to that, we went out with an RFP for CIO. Ryan and 3 other people applied for the position. And Ryan was actually chosen from the evaluation committee. However, At that point, trustees took a step back and said, we would like to get our own investment consultant in. So as a result of that, Ryan was, position was reevaluated as a, treasury director instead. And he was there just to execute the investment consultant that the trustees hired. That, that investment consultant was hired. It took at least 6 months for that person to come aboard, and that's Vjoy from Consequent. However, Vjoy is not, his role, from what I gather, is not the day-to-day management of the Native Hawaiian Trust Fund.
That's
So then-
correct.
So at that point, Stacy spoke with Chair, and Ryan was placed into the endowment director position so that he would manage the day-to-day investment decisions, or, you know, bring the investment decisions to the board. So since January 5th or 6th, Ryan has assumed that position as endowment director. And so his first step is to relook at the asset allocation and to start managing the Native Hawaiian Trust Fund on a day-to-day basis. Thank you.
Thanks.
That's interesting. I recall most of what you just said, but I think that some aspects were not asked of the board. Like, we didn't know that Ryan was going to be moved, and then there would be kind of nobody there to continue the movement of investments. You know, all of a sudden we saw a new position, which was Ryan's new position. So when Vjoy came in, I asked Vjoy, what do we need? We don't need a whole lot of positions, and we don't need I recall Sylvia telling me that a CIO would get paid around $300,000. And also in my talking with different portfolio people, they told me that since our portfolio is not $1 billion, we don't need a $300,000 person on, and I shared this with Sylvia. So I don't know if she thought that we were gonna not need Ryan. So she created a vast position for him. And, you know, we value Ryan's experience and intelligence. It's just what we wanted him to do. And this is why we have an advisor like Vjoy to tell us if we match up with Ryan's qualifications and what he was doing and is doing. Is that good for OHA? And Vjoy seems to think it is. He likes Ryan as well, but he has some suggestions on what we should do and what we shouldn't do, and that's why he reports to the board. So I don't think saying that we didn't do anything for a period of time is a fair statement, because there was some confusion between the board and our CEO at the time as to what Ryan was doing. And we weren't getting timely reports to the board. That's why we didn't know. If we were getting timely reports, we would know what Ryan was doing. We know he's a smart guy, but what is he doing? So this is why Ryan is reporting today, actually, because I shared these things with Vjoy. I said, well, you know, we didn't know some of the things what Ryan was doing. And therefore, you're telling me he was stagnant for a few months. And to me, that hurt our portfolio.
Ramona.
Chair Lindsay, I don't know what the miscommunication was. But I'm glad that Ryan is now in the position as endowment director for OHA. And just for the record, I'd just like to explain or kind of list his qualifications. So he has 2 decades of experience as a finance and investment professional. During his tenure at Kamehameha Schools, which was right before he joined OHA in 2021, it spanned 16 years with Kamehameha Schools, and he played a pivotal role in shaping the institutional investment program. His expertise encompassed a wide range of responsibilities, including investment policy design, strategic asset allocation modeling, global multi-asset class investing, and conducting due diligence on institution investment managers for the organization's 12 billion global diversified portfolio. He holds a bachelor's degree in finance and a master's in business administration from the University of Manoa. Additionally, Ryan previously held licenses as a registered investment advisor and a certified financial planner. He currently serves as the investment committee chair for both Chaminade University and the YMCA of Honolulu Endowments.
I don't think any of us question Ryan's capabilities. We're very aware of his, it's just what process we went through over the last year that didn't make sense. You know, the holdup of moving forward. We didn't know that he was not doing anything and I know it's not his choice. I believe he was told that by our CEO that, oh, there's questions about policies or whatever, and therefore he was switched to another position. So when he was switched to that other position, we wondered if anybody was looking at our portfolio at that point.
Ramona, you guys, this conversation's only getting marginally related to the agendized item, but
Okay,
If you-
I'll just, that's okay, because
Okay.
it's just gonna take it further. Thank you, Chair.
okay.
I'm good too.
Okay, Ramona, you can respond. Go ahead and respond. And after this, I guess trustee Trask is going to, oh, she's Ramona.
Okay, so I don't agree that it was a prior CEO's fault that that Ryan was put on hold. I don't know what happened, but I don't think that, in my opinion, that Sylvia Hussey, as the prior CEO of OHA, was responsible for Ryan not being the endowment director then. Sylvia was part of the RFP and the evaluation committee that evaluated three other people during the process, as well as the CEO, Casey Brown, and myself. Thank you.
Trustee Trask. Trustee, he can't hear you for some
Can you
reason.
hear me now?
Yes.
Okay. You know, I wanted to go back a little bit because this has actually come up earlier. And I had a couple of meetings with Casey about it. You know, he had told me, we were talking about the endowment fund. And I told him that there was no records that I could find of a previously established endowment fund. I know they have one at KS, which is where a lot of our team come from. But I could not find any vote or discussion of the board under RM that approved something that was to be entitled an endowment fund. That's, you know, one question that I had. When I had talked with Casey at the time that Ryan was being moved, when I had talked with Casey, he had told me that not only for the portfolio, but especially for property, that he had his own independent consultant that was hired by OHA only to work with him and the staff. The investment consultant, I told him, who is it? I mean, we're in training. Who is the investment consultant that only consults with the board and the chair and excludes the trustee? And I'm looking at my notes from Casey. And Casey told me that the investment consultant is the Peninsula Real Estate Group.
No.
And then when I went and looked them up, it's Sam Chung. So I really don't, I really don't understand the reporting we're getting from the office. I'm not trying to blame you for anything, Ryan, because I know what happened, but I don't know why we're characterizing portfolio assets as an endowment, and that I had raised with VJoy. And I don't know why I did not know that OHA had an independent asset consultant that only worked with Casey, the chair, and Sylvia. And I still don't understand that to this day.
Okay, trustee Souza.
Madam Chair. I really value this time with each and every one of you. I look forward to these RM meetings, BAE meetings, BOT meetings. I think the point of these meetings are to get stuff done, right? Not to go back and forth. Blame game. Who was involved from the beginning? Who stopped the investments? At the end of the day, I'm here to get one job done, to support our beneficiaries and to do the most for our beneficiaries, right? The more we invest, the more we make, the more we can do, and we can spread it out, right? My question is, I don't like to waste money, right? Just to put into perspective, today I made $3,000, OHA lost $1 million. Sorry, we just didn't make $1 million, right? So now I ask the question, why are we paying Ryan Lee, then we're paying VJoy, right, to do the same job? Essentially,
Not the same.
job title, job duties, job description, all may differ. Essentially the same thing. I don't like wasting money. I don't think our board likes wasting money because we have one audience to answer to. That's our beneficiaries. I don't appreciate sitting around this table and having conversations of who did this, who should have done this, because while we have that conversation, we're losing money. No, sorry, I take that back. I correct myself again. We're just not making any money. That's a concern. So I think this conversation should be, who are we paying? And if we're paying Ryan Lee, let's let Ryan Lee do his job, right? I don't need a consultant to tell me that Ryan Lee is doing his job, because I think Ryan Lee has shown what he's done. Ramona, thank you for that, but I don't think you even need to talk about what Ryan Lee has done. Kamehameha knows what Ryan Lee has done. OHA doesn't know because we didn't let Ryan Lee do his job. So I'm asking my colleagues to let Ryan Lee do his job from here on out. I don't want to have this conversation. I don't want to learn any more terms, any more investment terms. I know my own investments. I know what I'm doing. Right? When you're talking about $500+ million, I think that's kind of cute, right? To Ryan Lee. So let's let him bring it up to a bill. He knows that. He knows what I want. He knows, VJoy knows what I want, right? We made it very clear when we had our meetings on the side. I think all trustees understand that the more we make, the more we can do for our beneficiaries. And also to our beneficiaries watching today, I think they need to understand that we have your best interest in mind. We're not over here being selfish. It's not my money, it's your money. I'm a beneficiary as well when I walk out this door, but it's your money. We need to figure out how to get it to you. So let's invest. Let's do it. Thank you, Chair. Mahalo.
You guys, is there any more questions or discussion on the investment portfolio review for the quarter ending March 31st, 2024? Okay, thank you, Ryan. With that, we will move on to our continuing education. Is there any testimony?
Zero testimony, Chair.
Okay, so with that, I will turn this over to Bijoy Chatterjee.
Aloha kakot. Thank you, Chair and trustees for having us back here to present to the board, also to our CEO and staff and beneficiaries who may be watching. We are Consequent Capital Management. My name is Bijoy Chatterjee, and we are the board consultant to OHA. And so happy Lay Day to everybody. Sorry, I don't have my lei, but so always a festive a day, as many of you know, and a lot of the different schools putting on assemblies for it. So what I'd like to do is what we do at all of our RMC meetings, which is to take you through the presentation that was distributed ahead of time. And what we do, if you look on page 2, our meeting agenda today, we have our background information. We'll give you an update on the activities that we've undertaken since the last meeting. We'll also talk a little bit about investment governance. And you'll find there's an attached document, which is proposed policy for governance going forward in your investment policy statement. And we'll talk a little more about that in a second. And then we are also going to hear from Northern Trust this afternoon. We've already heard from staff regarding the performance, and I think that's a very good thing that they do, is to regularly come in front of the trustees and answer questions for you, and also to report into the public about the performance of the Hawaiian Trust Fund. And I think Ryan did a great job of making that presentation today, and look forward to him continuing to do that. And then, as I mentioned, Northern Trust, who is both your custody service provider as well as your performance reporting manager, will give a presentation. And they are, by the way, responsible for the material in your quarterly presentation. And so we can talk a little bit more about that. Now, if we turn to page 4 of the presentation, what I will do is review a little bit about what we've done. So last time we talked about investment beliefs. And so that is an open item. We had 8 beliefs that we put forward for the board, and look for feedback and continue to update that or revise that until we can get that into a policy statement. That was in last time's document, if there's interest in looking at the beliefs right now. But I will, I want to tread carefully, but point out that in the news today, there's a lot going on right now, as you are all aware, at university campuses. And part of that discussion has to do with the way those universities invest. And I just want to make a connection here with investment beliefs. But as investment boards with universities and other entities are pressured to change the way they invest or consider how they invest, something like investment belief statements, knowing why you're in the capital markets, why you invest, and how you're investing, can provide a lot of structure to how you respond to those sorts of activities. And OHA is clearly not a university endowment and doesn't face those sorts of pressures. But over time, as a public entity, you certainly are accountable to your stakeholders, to your beneficiaries, and being able to explain in clear terms what you believe and why you're investing is why investment beliefs can be particularly important. So we'll come back to investment beliefs in the future at some point when we are going to ask for adoption or new policy discussion. But there's a lot of time for us, whether in these meetings or inside meetings, to have these conversations.
military.
Thank you. Vijay, I don't know how you can make a possible connection between our investment portfolio and the chaos that's going on in the universities. So please stay away from that. Let's just get back to the agenda.
Sure, trustee. Let me work through the bullet points here then.
Thank you.
And to be certain, I wasn't trying to make a connection between your portfolio and what's going on in the universities. I was trying to explain the role of investment beliefs, which are universal with institutional investors. But I hear your concern. Also, last time we heard from both PIMCO and State Street, as you recall. And so it's important to understand those are two of your investment managers and why they play their role in the portfolio. State Street is one that does a lot of sort of index or passive type investments, and that's what you sort of expect from them. PIMCO, as we heard in the previous comments from Ryan, they manage a more strategic or tactical type portfolio and sort of very different roles in the portfolio. And so kind of understanding where that sort of fits. Today and kind of where we were starting to talk about previously is the idea of where investment governance of the board in the portfolio should be. And so we do have as an attachment some suggested policy language. As has been referred to me, though, regarding things like that policy language and all the policies, even though we're bringing it to you sort of every meeting, we'll ask for action item or adoption of that policy in the future. So I guess it's a kind of, we'll do it all at once. It's I guess what I'd call an everything, everywhere, all at once type of approach, which is suitable rather than going back and constantly changing it. So if you got the movie reference there too. Finally, finally, we're going to talk about, of course, custody and performance. As I mentioned, Northern Trust is here to make that presentation. Upcoming, just note that it's not in the material that was passed out, but there is the Milken Institute that Ryan will be attending on behalf of OHA coming up in early May. I will also be at that particular conference and find it to be very educational and useful in terms of discovering investment ideas and having conversations with other institutional and high quality investors. The next RMC meeting in May 22nd, you have a full slate, I think, of action items, but also in terms of presentations, you're going to hear from JP Morgan, Goldman Sachs, and then Makita, which acts as a investment consultant. So as we've brought in different types of institutional investors, we think it would be appropriate to also hear from a group like Makita that provides institutional consulting services to entities like yourselves, institutional asset owners. So that'll be a full slate. And then you can kind of see we have a couple other meetings then in June and July as those sort of come on. So if we then move on to page 5, which is the investment governance page, note that sort of on the right-hand side, the importance of investment governance policy is to kind of express the role of actors that have discretionary authority over the management of your assets. And primarily those fiduciaries, of course, are yourselves, the trustees. Ultimately, you have the fiduciary responsibility to oversee those assets. And while the policy, and in fact, it's your ability to delegate certain activities around the management of the portfolio, ultimately, you can't delegate away your fiduciary responsibility. And that's sort of written into the policy as well. But in addition to the trustees, when investment managers, your service providers, staff, and others function according to your policy in managing the portfolio, they often act as fiduciaries. And that's what you would expect from any of your investment managers. There are other service providers who are not necessarily in a fiduciary role. If you get sort of legal advice and other sorts of, they can be hired without necessarily having a fiduciary role. But ultimately, again, that lies on the trustees. And so in terms of the governance, we did have at one of our very first presentations, a group come in and talk about governance of fiduciary portfolios. And so we talked about the duty of those fiduciaries, particularly the board of trustees,
and the need for loyalty, prudence, and impartiality in conducting your oversight. And then in terms of the training that we've done, you had global governance advisors come in early December. You also, and there's their website is available there. You also heard from several other investors who have fiduciary responsibilities over other portfolios. So you heard from an EUTF trustee. You also heard from a former CIO of the EUTF, and sort of how they have conducted themselves and gained the experience and oversight of that particular portfolio. So in terms of the importance of investment governance, I think on the left-hand side of slide 5, you know, the governance is critical for a number of reasons. One very important one is that poor governance, it's been studied and suggested, can cost a portfolio up to 1 to 2% returns over time, and that's a significant loss in terms of what poor governance leads to. They also talk about the need that governance is an active management of your portfolio, in that carrying out the policies and making sure they're executed the way that you will structure your policy is a very active and important role for you as trustees. And then in terms of the future benefits, obviously strategic oversight and management is, again, what Trustee Souza's brought everyone's attention to, is the importance of providing these assets and resources for your beneficiaries, not only the present generation, but for future generations. So there's that kind of generational equity that you also have to be thinking of down the road. So on page 7, I just referred to
Trustee Trask.
You know, I wanted to ask a question of you, Vjoy, where we're here now in our training to the date. You have already come forward with the recommendations, which I very much appreciate. And the first recommendation is that because the fiduciary obligation over assets, both real estate and portfolio, is a fiduciary obligation of the board, it is non-delegable. We cannot delegate it to anyone else. But when I take a look at our training in terms of the policy that we're getting from you, I do not see that it is in place now with the independent consultants that we have. Possibly Ryan, because he's been here with us. But Peninsula, that's not what's happening with them. Peregrine Realty, that is not what is happening. These things have not been approved by the board. And I'm very, I'm concerned about it. Just a few minutes ago, when we were talking with Ryan, because he's wearing different hats. And I think that that's a common problem that we have. But now that we're working with you, Vjoy, it's very clear that your first recommendation is to bring the oversight and decision-making of the assets back to the purview of the Board of Trustees. When I went and did a deep dive, I found that all of these decisions are under the admin, but all the liability is with the board. And I'm telling you this because I need some help to put together that policy, which I would like to get to the board right now. We have to return oversights of the trust assets to the board. We have a fiduciary obligation there. We took an oath and it's non-delegable. So you can hire Sam, Ryan, Peregrine, and all of them, but we still have the obligation So I'd like to get that on the agenda. It came out weeks ago that the authority and oversight of our people's assets is to the board. So let's get that on the agenda of the BOT so that we can make that change right now. You know, we have months more of training to go with VJoy, and I think we're gonna need his services even beyond that. But, you know, given the fact that we got this recommendation and we look at what we just discussed, we need oversight of the assets of our people to be transferred back to the board. And the truth is, when you hear that term, it's non-delegable. What VJoy is telling us is that we could not have delegated it. We're still fiduciarily responsible. So let's make the changes, yeah? And if you go back, it came out in the advisory from VJoy in March that we return the oversight of all assets to the board. I'd like to see that put on the next agenda of the board. And we have both our RM and beneficiary BAE chairs here. So I don't see a reason to drag it on for another several months. Bring it back to the board and let's make the policy adjustment that all decisions relating to these investments by capital or real estate are to the call of the board.
Thank you, trustee. Let me just clarify though, in terms of the policy, the governance document that's in front of you, that's written specifically for the Native Hawaiian Trust Fund. You know, the conversation, I think, of the real estate assets up to this point has always sort of been outside of my purview. I don't necessarily have a strong feeling one the way or the other in terms of how you should manage that. Sometimes it does make sense to have all the assets oversight in kind of one place, but that's again, really a decision that's up to this board. But the
You know,
governance
VJoy, I understand what you're saying. And I understand that your training is not for the entire portfolio, more in terms of portfolio management than real estate. But I am also advised by the State Attorney General's office, the State Attorney General colleagues. And that is that we're to have a framework policy that meets our trust obligation and our obligation for accountability of assets. They are to be under the same policy. And that's why I'm looking at the advisory that we got from VJoy. We're not in a position to say, okay, portfolio we'll bring to the board, but when it comes to real estate, we'll leave it with Sam, Peninsula, and Peregrine. We cannot do that. And I want this to be on the next agenda. At the present time, the property and asset management is under admin. Impossible. Bring it back to the board at the next meeting. And VJoy's advisory came out, I think it was March 5th. It's the end of April. Come on.
VJoy, you can
Are you-
continue with the,
Should I continue or are
Yeah,
you
well,
gonna
go ahead.
react or something?
I'll continue with the,
Okay,
wherever you were
okay.
with the.
Thank you,
presentation.
trustee Trask. I would, if I could just, then I'll finish up my portion and then we can move to the Northern Trust presentation. But you have a draft policy document in terms of governance. A lot of it is roles and responsibilities. So given this conversation, but also just the fact that that's a big part of this document, if the trustees have the time to look at that in more detail, because again, we'll come back with a complete kind of recommended policy that you can adopt, you know, probably it'll come up, let's say June or something like that. You know, we're going to look at things like the portfolio structure. We're going to look at, you know, there's some things I've discussed with Ryan. He's interested in looking at, you know, how to go about putting groups on watch and sort of, you know, we do need policy to kind of govern that and be accountable to the trustees of how managers are subscribed to or terminated over time. That's something that we'll also be bringing in front of you additional policy documents like this one. And then we'll have a complete sort of, document that hopefully you can revise, but hopefully at that point, we have all the input and the revisions from staff and from the trustees so that it in fact can be adopted. And I guess the present discussion, if that becomes part of that again, I look to the trustees for guidance there, in terms of how you want to proceed. But right now, it's sort of focused in on roles and responsibilities, particularly in oversight of the Native Hawaiian Trust Fund as it is structured today. Okay, so with that, I
Sure,
think
before
I'm
you-
gonna,
If you're moving on to the consequence capital management portion. Next, okay, is there anyone signed up?
No testifiers, Chair.
Oh, okay. You continue
okay.
with that.
Okay, then I think, that completes the policy and education. If there are questions related to anything that's been said, I guess for the entire meeting, I'm happy to, do the best I can in sort of answering them. Otherwise, at this point, if it's appropriate, Chair, I'd like to invite, Northern Trust, who's one of your service providers. They're not an investment manager, but again, what they do is they provide your custody activity, they oversee your custody of your assets and the different tasks involved with that. And then they also produce your performance reports. So what Ryan was presenting, they also do sort of monthly performance reports as well that go to staff. And I'd like to invite them up to come and talk about their role in with the Native Hawaiian Trust Fund and for OHA.
No, I just asked. That's what I was asking about.
Aloha.
Okay,
Chair and
aloha.
Trustees. Thank you so much for having us here today. As mentioned, we're from Northern Trust. My name is Ali Gatillo, and I am the relationship manager on the custody side for OHA and staff. And I'll let my team introduce themselves.
Hi, aloha. My name is Patty Caloris. I am a division manager at the Northern Trust. So Allie is direct boss, but I run half of our public fund business within the organization.
Aloha, everyone. My name is Brett, and I am the Northern Trust performance reporting consultant for OHA. So I help provide Ryan with monthly and quarterly performance reporting and interpretation of the data, and making sure that all of the performance reports and performance information is accurate and timely.
So our goal here today is to give you a high-level overview of who Northern Trust is, what we do as your custodian, specifically in services to OHA, and then as well as talk about performance. So I'm going to hand it over to Patty to talk about Northern Trust, and please feel free if you have any questions to interrupt us. Thanks.
Yeah. So first and foremost, thank you for having us here today. We're thrilled to be here and thank you for the business. We've worked with you since 2022, so it's been a short time, but it's been a great relationship for us. So thank you very much for the business. I'm going to talk a little bit about Northern Trust. I'm on page 2. Oh, maybe page 3. Sorry about that. There we go. So just from an introduction perspective, Northern Trust is a Chicago-based financial services firm. We have been in business since 1889. We were founded as a trust company in Chicago, and that fiduciary responsibility of a trust company and a trust corporation has really go through to our culture all the way through till today. We're based in Chicago, so I and Allie are both based in Chicago. So thank you for having us here today on the beautiful islands. And Brett is located in our our Arizona office. So we do that sometimes just because of time differences, right? So that he's closer to Ryan, and when Ryan's available, and he could be available more often. But as a financial services institution, we are a little bit different. We are not what I would call a retail bank. So we don't have, we're not like a JP Morgan where we have retail branches in the cities and states. We really only do two things, which is asset servicing, which is custody, which we're going to talk about today. And then we do investment management,
I'm
which
looking
we
at the
don't do
rest
for
of my
the plan
calendars.
at the moment.
Yes.
And we are market
Other
leaders in both
meetings
of
this
that. As you
week.
can see, we've got about
Don't we have
13 trillion
something
of assets under
tomorrow?
custody, about 1.5 trillion of assets under
What about
management.
Friday?
So certainly a market leader in both of those
So
areas.
really, it's
When
just
you
the
think about
AE and
I'm going to
RM.
focus today on the custody business because we don't currently do investment management for you. But when you think about the custody business, there are really four big players within the U.S. Northern, State Street, JP Morgan, and then Boney Mellon Bank. And when we think about our competition in that, we like to say we're the smallest of the big. If you look at our assets under custody, we're a little bit less than some of the other providers. But we're the biggest of the small, meaning that allows us, that size difference allows us to really focus on our customers and focus on the service aspect of the business. What I thought I'd do is spend 2 minutes to talk about what a custodian is, right? And what we do. So important to know first, which Vijay already mentioned, we have no investment discretion over the portfolio, right? We don't invest any of your assets. What we do is two things. As you make decisions from an investment perspective, we work with the staff to execute them for you, to move the money, to, if your investment managers buy securities, we settle those investments for them until we execute the plan that the program manages. And then just as important, or a lot of times more importantly, we're your book of record. So we're your official book of record of the portfolio. We're independently valuing your securities and the assets in the portfolio and creating a monthly report that we send to the plan that details out the market value and all the transactions that happen in the portfolio. One of the things that I think is important about a custodian for us to do that is that our financial strength is an important part of that. So I'm just going to spend a couple minutes on the next page. And banks have been under some, there was a lot of press last year about a couple banks that had failed. So I think it's also important to just talk about our financial strength for you. So we are, one of the things that really changed after the financial crisis is our reporting requirements for the Federal Reserve. We are regulated by the Federal Reserve, and they changed their capital requirements. And so you can see on the top left part of this page, we are more than well capitalized by what the Fed requires. On the bottom part, it talks about our credit ratings. We are one of the highest credit rated financial services organizations. That is important because Moody's, as some of you might know, Moody's came in last year and redid all the banking ratings, and we were very, very happy to keep our rating. They didn't downgrade us. They didn't change us at all. So we're very proud of that. And then last but not least, on the right there is our balance sheet. We very conservatively manage our balance sheet. That's important. The reason I bring all this stuff up as from a custodial perspective, why we think it's important and why it's relevant to you is really three things. Three reasons. First off, we have to protect your assets, so we have to have the financial strength to do that. The second thing is that this is a technology business. When you talk about custody, and Allie will talk about that, we need to have the capital to make sure we're continuing to invest so we can continue to bring products and services to you. And really, our job is through that to make your staff's job easier. And then lastly, that does provide us the ability to be a good counterpart for you. If you ever needed us to help you with brokerage or foreign exchange or anything like that, it allows that as well. So that's just a high level, very high level of what we do as a custodian. Allie's certainly going to go into more detail about what we do for you specifically and our history as Northern Trust. Any questions I can answer for that? And we did forget beforehand time. So I didn't know how much time we had. We expected about 30 minutes. Is that still okay or? Okay, so we've taken about 5, yeah. Okay, so I'm going to hand it to Allie's going to talk. Please interrupt as we said, ask questions. Allie's going to talk about what we do specifically for the Native Trust.
Thank you. If you can skip to slide 12, I'm going to skip a couple of the other slides. They're really in there for reference if you'd like to look at them at a later date. On this page is just our core custody services, which Patty kind of hit on, but this is my role as the relationship manager for OHA. I am their main point of contact, and it's really my job to ensure that I'm bringing the right servicing team and our operational team to meet the daily needs of the OHA staff. And what that really means from our core custody services perspective is making sure that your trade receipts, that we're capturing them, the trade settlement is occurring, that we're safekeeping your assets, as well as the final output of accurate and timely accounting and reporting. On the next slide is really what we call our complete solutions continuum. What I went ahead and did was highlighted in white are the services that we're currently providing for OHA. And as you can see, the ones out of the ones that are highlighted, majority of them are part of our core custody services. From the asset management perspective, we're doing cash management, and that is very standard for all of our custody clients. So any cash that is held will be in one of our Northern Trust funds to gain interest on as it's held. From an asset servicing perspective, we've mentioned safekeeping of your assets, but we also do what is a large portfolio of yours is your alternative asset servicings. So what that means is that we become an interested party to your funds, your investment managers, and they send us any capital call notices, they'll send us valuation statements, and that's how we're getting our data to upload as book of record for your funds. And part of that as well is what we call our capital call execution service that you guys are a part of, and that just means that we're getting your capital calls and entering them into our systems and giving them to the fund managers. A couple other things we'll talk about later is the performance analytics. And then we do regulatory reporting. So we'll work with your auditor on every annual year end, give them all from a GASB requirement standpoint, and then any other details that they need, as well as work with them on any questions that they might have as they go through their audit. So we're there for support for that. Oops, excuse me. The next page just really highlights a lot of the custody services that we're doing for OHA today, as mentioned previously, but we give a monthly reporting package that's delivered automatically on 13th business day. And then we have our passport and online applications, which is our technology piece of the custody service. And that allows our clients to utilize our technology to pull data, run dashboards, and get the data that they need in order to do their daily needs, as well as being able to move cash around to certain portfolios or things like that. And that's very secure. And what we mean by that is we have requirements in place that the same person who's entering any type of money movement cannot be the person who's approving that money movement. So there are steps in place that there has to be a separation of duties there. From a cash processing standpoint, we do have a standing instruction in place, which just allows cash to move between a portfolio. Once a distribution comes in, it'll go directly to that cash account so that it can be invested as needed. There are ancillary services that are being provided to OHA currently. IRAS is what we call our investment risk and analytics services that Brett's going to talk about. But we also have Data Direct, which we think is a great tool that shows our technology. It allows clients to not have to log into Northern system, but allow them to have a secure Northern Trust plugin on their Excel, which will download the data directly into an Excel format. And then we also we worked with Ramona and team on providing a trial balance reporting that allows them to get journal entries to do their general reporting on a monthly basis. And then this past audit that we had, we created a annual alts. We call it a delta, and it's really just giving the idea of what assets looked like as of close on 6/30 versus when we actually got the 6/30 statements in for valuations. And then there's just a couple of potential service opportunities that I highlighted that clients like yourselves do with Northern Trust, and that's really index management from an asset management perspective. And then we've been in talks with Ryan and team of bringing the real estate assets on record at Northern Trust. Excuse me. I'm going to go down one more page. And this is the key metrics for OHA. So I just wanted to give a highlight of what has occurred in the portfolio since we became custodian. So back in 2021, Ryan and team did a due diligence on a search for a custodial provider, and we were in talks since then. The RFP was issued and we worked. As mentioned, there's about 4 main competitors in the industry, but we did a finals presentation in late 2021 with the CEO, CIO, Ramona, and Ryan. And then we spent about, I'd say 10 to 12 weeks really getting to know the staff once we were selected, and the portfolio, and working with State Street to bring the assets on record at Northern. And those assets were brought in July of 2022. From there, we have about 573 million right now as of 3/31 on record. A plan structure of about 12 custody accounts. With that capital call execution service I talked about, we've done about 20 capital calls for the plan, and those include from Common Funds, PIMCO, and Pantheon, just to name a few. As well as your separately managed account, JP Morgan, had about 500 security purchases and sales. So this just gives you kind of a high overview of what the portfolio looks like at Northern Trust. So I'm going to turn it over to Brett, but before I do you have any questions? I'm sorry, from a custody perspective, the services that we're providing from Northern, or my role in particular? Great,
No.
Thank you so much.
Thank you, Ali. So as I mentioned before, I am the Northern Trust Performance Reporting Consultant for OHA. The department I represent is Investment Risk and Analytical Services, IRAS for short, which is just kind of a lengthy way of saying performance reporting. We do have a few other services that fall under our umbrella, which are some risk monitoring services, compliance monitoring, and some private equity solutions. But the vast majority of our business is performance reporting. Most of our custody, if not all custody clients, subscribe to performance reporting since they're pretty directly tied together. So if you want to skip a couple slides here, maybe one more. So this page will just kind of detail our workflow and monthly procedures and whatnot. So the current OHA accounting sign off is on 13th business day, and the performance reporting service level agreement is 48 hours within accounting sign off to allow us time to audit and build the reports and review the reports before we send to Ryan. So we are doing that on a monthly as well as a quarterly basis. As far as the reporting setup itself goes, Ryan and myself are in constant communication on what needs to be on the performance reports, what's important to present to OHA, make sure that Ryan can interpret the data as he understands it, and all of the calculations are correct and accurate. So as you know, as with State Street as the previous custodian, you were using Siegel Marco as your performance reporting consultant. So now that we have taken over the custody business, we are doing performance reporting in-house. And with that, we took all of the performance information provided by Siegel Marco and loaded it into our system and built our performance reports off of what Ryan had directed and seemed important for OHA. All of the metrics and information and pages there, all of the information is directed by Ryan in case there's new accounts or changes to the policy or benchmarks or anything along those lines. Another thing that I wanted to mention too is as far as timing goes, we sign off on 15th business day typically, but we also use Northern Trust peer universe information in the reports that Ryan had showed previously. And we also have third-party universe information from eVestment, which is typically available towards the end of the month. So it's my job to, communicate with Ryan and get him the most accurate information as soon as he can, even if we're still waiting on sign off on some of that universe information, just getting things to him throughout the month when he needs it. So I'll move on to the next slide here. Kind of similar to the slide Ali showed earlier, the first column is the current services under OHA's performance reporting subscription. The middle column is additional services that IRAS does offer. And the last column is potential service opportunities for OHA that we have been in discussions with Ryan about. So under your current services as a performance client, you get, kind of the core performance information. So rates of returns, benchmarking, allocation on a monthly and quarterly basis, as well as the market commentary that Ryan had shared earlier, which is written by our Northern Trust Asset Management team. Along with that, other things along the performance line, such as plan level attribution and risk statistics and access to our online tool Radar, which is a tool that Ryan can use to go in and view performance information for either research or analytical or building reports, however he sees fit, as well as Data Direct, which Ali had mentioned earlier, which can be used for accounting or performance reporting to pull information into Excel to build reports or do ad hoc research. For additional premium services that IRAS does offer, the first one I wanted to mention is we do have a manager ROR comparison service. So we would, if you had SMAs or investment managers who were providing their own performance reports that have their own rates of returns on them, we would provide an analysis of if there is a difference, why is there a difference in our commentary on that. Typically, it would be attributed to differences in pricing or methodology. Since we are the custodian and book of record, we are using our own pricing and timing of transactions compared to what a manager might be doing something differently. So it would just be additional color on why there would be any differences. Another service that we offer is board meeting or board level reporting. So if you didn't have someone like Ryan to do like your board level performance reporting, we could have somebody come in and present the performance data. And a couple other sides of IRAS that I've already mentioned is our compliance, private monitor risk, and we also have a newer ESG reporting capabilities as well. And we also have some clients who do their own performance reporting in-house. So one of our services would be just sending our kind of bulk data via either APIs or some other sort of source so that clients can do their own performance reporting on their end if they were to choose to do so. And then the last column here for potential service opportunities, these are things that I've discussed with Ryan. The first one on here is this idea of time-matched or non-lagged performance reporting. So Ryan had kind of mentioned this earlier about how the rates of returns for the private assets are currently lagged on the performance report. So maybe they haven't caught up to this period, and that could attribute to either underperforming or overperforming in certain situations, depending on the timing of when the statements come in. So typically in performance, we are doing non-lag performance reporting as soon as the statement comes in whatever period, that's when it's updated in accounting as well as performance. We have the second option of we could build out kind of a second version of your performance tree, which is true to the period that the statements came in. So the only caveat with that is we would have to wait for all of the statements to come in, and you would be looking historically at last quarter's performance of how it actually looked in that period instead of always looking at it from an unlagged view. So Ryan and I have discussed that, and everything on this list, is up to your discretion, and if it makes sense to make more informed investment decisions. But another thing I wanted to touch on was something that we've been talking about, and it's more robust private equity reporting. So just understanding Ryan and OHA's needs of what are the metrics that are important to OHA, like what kind of reporting or platforms does OHA need to be able to service their private equity accounts and assets. And along the same lines it's my job to keep Ryan updated on any new products or service enhancements as well as training. So that's always kind of an ongoing discussion. And really the last thing I wanted to touch on was this idea of if we are ever going to integrate like the OHA direct real estate holdings into the portfolio and how we would account for that or build that out within the performance system itself. So I know that's a larger conversation to be had in general, but how we could fit that into performance reporting at the total plan level. Are there any questions?
Trustee Galatario.
Yeah, thank you. And mahalo for coming to Hawaii. And yeah, we'll try and, not keep you any longer from this beautiful day in Hawaii.
We've all been here a few days. So.
Yeah, well, thank you. Mahalo for that. I think just for the benefit of the board, what is the most common concern that you see with portfolios like ours? And with, the performance subscriptions like OHA's?
Yeah, in my opinion, what we see most of our clients struggle with is the ability to analyze a portfolio that is as not spread out, what's the term I'm looking for? Diverse as yours, right? You got a public market exposure, you've got private market exposure, you maybe might add real estate. Most clients really struggle with getting all that data together and being able to then really analyze the portfolio. Where is that performance really coming from? If I'm underperforming, where is it really coming from? If I'm overperforming, where is it really coming from? And getting the tools that are necessary to make those types of decisions. Because obviously, you could have a manager that's overperforming and that could really be a bad thing because they're out of their investment guidelines, right? And so it's managing the compliance to that and things like that. So I would say that's at this point, I mean, there's a lot of other struggles out there too. I mean, there are regulatory changes around the financial services and the investment business is significant now. The SEC is making a lot of changes. The Fed is making a lot of changes. So for any investment manager of financial services, we're working on those so that we can work on that with our client. And then lastly is technology, right? How do you make sure you're spending on the right technology that'll make us more efficient and you more efficient, right? It's got to be a shared spending there. We've got to make it easier for both. So I would say those are the three things that most of our clients are really struggling with.
Thank you, Sherwin. More is a I think a thought than a question, but you observed a robust discussion about why we want to get the lead out. So we would hope that your discussions with Ryan would provide us with the timely information that we need.
Absolutely.
Because it appears that the board is in analysis paralysis. And what we need to do is we need to be more robust with our portfolio. And so that's why we appreciate these conversations. We really do. Yeah. Thank you, Chair.
Oh, Ryan.
I can add, in terms of when we're looking at Northern Trust, we wanted to make sure we set up the structure to move the portfolio forward, right? To make new investments, new reporting that would be required. So that was a lot of considerations when setting up the actual account structures and in reporting to actually make sure that it would be able to handle the new investments that we kind of move forward with.
Trustee Aquino.
Yes, and thank you for coming to Hawaii, and thank you for your service to OHA. Do you do performance reporting for combined real estate and securities for many institutions? How common is that?
Yes, yeah, I would say, yeah, it's pretty common. And from the performance reporting perspective, it's not all that different to integrate real estate as it is any other alternative asset if it's private equity or hedge funds. I think that with like direct real estate holdings, we'll have to discuss how we want to report that on even on our custody side, how we're coming up with those valuations. Are we tracking, payments or income or any other sort of consideration? So from that aspect, it might be a little less straightforward than, investing in real estate funds, for example, or something along those lines.
Thank you.
I was just gonna add that we've had robust conversations about the real estate assets and bringing them on at Northern because we have such a diverse group of clients. Not me personally, but Northern Trust as a whole services, insurance clients, public funds and things like that. So everyone kind of has a different way of wanting to see those real estate assets on record, direct real estates. So that's what me and Ryan and team have been working through on how we can get it to the best information possible so that your performance on those are accurate and timely.
Is that? Hey, is that it?
We're done.
Oh, well, thank you. Well, thanks. Oh,
Patty would probably like to close.
No, just to say again, thank you so much for having us here today and thank you for the business. It's been a great relationship. We really look forward to working with staff and the trustees as you grow the plan. I think you made the right decision with the right custodian to help, that can really help you and as you grow the plan. And to your point, your real role here is to serve your annuitants and we just want to be a help to that as best as we can. So thank you so much. Mahalo.
thank you. Thank you, Ali and Patricia and Brett. So with that, can I get a motion to adjourn?
So moved.
So moved by trustee Souza, seconded by trustee Luana. Any discussion? Hearing none, can I get a roll call vote?
Trustee Ahuna is excused. Trustee Akaka.
Thank you.
Aye.
You are not responsible.
Trustee Akina. Trustee Alapa. Trustee Galataria.
Aye.
Trustee Lindsay departed. Trustee Souza.
Aye.
Trustee Trask. Trustee
Yes.
Trask.
Motion-
And Chair Waihee.
Yes.
6 yes votes.
Hey, we are adjourned.
All right, everyone.
Thank you.
Just.